Okay, come let's take a look at Axis Max Life Smart Term Plan Plus. This is one of the most discussed and most bought plans at Ditto by our customers, and for a very good reason. Axis Max Life has not launched just one but 6 different variants under the STPP umbrella. So we figured it's time we broke it down for you. All 6 variants, all riders, what we think works and what doesn't. And by the end of this video, you will know if this plan fits your needs. And if you're still confused, you can always book a free consult with Ditto. The link is in the description. Alright folks, I'm Shashank and you are watching Ditto Insurance. We've helped over 8 lakh Indians pick the right insurance plan without any spam or sales pressure. We're backed by Zerodha, rated 4.9 on Google, and our team is fully IRDAI certified. And as I mentioned, we are just one call away. Find us with the link in the description. Alright, now let's start with the introduction of Axis Max Life. This is one of India's most trusted insurers, and since Axis Bank bought into Max Life and the insurer rebranded itself, we've seen stronger digital process, deeper distribution, and significant growth in business volumes. The company paid out claims worth 1,300 crores in the last 3 years and posted an average CSR of 99.62%. Complaints are just 5.6 per 10,000 claims, and its solvency ratio stands at a strong 1.88. So on metrics, definitely solid. Now, the Smart Term plan has 6 variants, but if you've ever visited their website or spoken to an agent, it can feel overwhelming. So let me simplify it for you. Not all the variants will be live or sold by all sales channels. So let's start with the regular cover variant. This is your plain vanilla term plan. Fixed sum assured, lump sum payout if something happens, and no maturity or survival benefits. All payment terms are available: regular, limited, pay till 60, and this is Ditto's primary recommendation if you're just looking for solid life cover without frills. Simple, transparent, and easy to understand. Next is the rebalancing cover. This is a bit more complex, and as of May 2025, Axis Max Life has actually discontinued it. Now, moving on to early return of premium or ROP plus. Under this, you'd get 50% of your premiums back when you hit age 60 or complete PPT plus 10 years, and the remaining 50% after the policy ends, all while retaining a 50% life cover in the second half. But here's the thing. ROP sounds attractive, but the premiums are significantly higher and the value of that money is just meh. We almost never recommend ROP, and this variant is no exception. Alright, the next one is Smart Cover. Now, this is Ditto's second favorite variant. For the first 15 years, your nominee gets 150% of base sum assured. After that, it drops to the base cover. So if you pick 2 crores, the family gets 3 crore for the first 15 years and 2 crore after that. This works beautifully for folks in the 30s or 40s, juggling loans and family responsibilities. It's only available with limited pay though, so make sure the math checks out. But if you want high protection in your most vulnerable years without paying for a full 3 crore cover all the way, this one's worth considering. Then there's the whole life cover, and again, it's another form of return of premium. You get back 50% of premiums at 60 or PPT plus 10, the rest at 100%. But the actual life cover is only 50% of your original sum assured after age 60, and given inflation and declining financial dependency at that age, the value just doesn't hold up. We don't recommend this variant either. And then there's the income protection variant. Instead of a lump sum, this one pays your nominee a fixed monthly income for 10 years or till the end of the policy term. While it sounds stable, we at Ditto believe lump sum is always better. It gives your family control. They can invest it, repay loans, or even create their own income stream. In most cases, the fixed income payout option doesn't beat what a simple FD would give you with a lump sum. Alright, before we move on, there's one more variant we haven't touched yet, and that's a regular return of premium, or what most agents just call ROP. Now, this is your standardized term plan, but with a twist. If you survive your policy term, you get all your base premiums back. Now, you're covered if something happens, and if not, your money isn't wasted. But the flip side is that ROP plans are significantly more expensive than pure term plans, like almost 1.5 to 2 times more expensive. And when you actually calculate the money that you get back, it doesn't grow, it's not adjusted for inflation, and the return works out to be much lower than if you just took a base plan and invested the difference in a mutual fund. So for most people, we don't recommend ROP unless you absolutely can't get over the idea of losing money if you survive the policy. But if you're the kind of person who sees insurance purely as protection and not investment, as you should, then a plain term plan with a lower premium is almost always better value. Now, regardless of the variant you choose, the policy includes some helpful inbuilt features. Let me go over them one by one. One is the cover continuance benefit, where you can defer your premiums for up to 12 months after the 3rd policy year without losing coverage, then in the intervals of 5 years. This is handy during financial emergencies. There's also terminal illness payout, where Axis pays out a part of your sum assured immediately upon terminal diagnosis. This is capped at 1 crore rupees. You get a special exit value or zero cost exit as well, starting at the 30th policy year. You can walk away and get your base premiums back, excluding taxes and riders, as long as you're not in the last 4 years of your total policy term of at least 40 years. Then there's Insta Payout on claim intimation, where up to 2 lakh rupees is paid within 1 working day of filing a claim after the first policy year. Now, think of this as a quick buffer for funeral costs or immediate needs before the full claim settles. And lastly, for female policy holders, Axis offers something called as Lifeline Plus. If your spouse passes away during the policy term, you can apply for a top-up of up to 50 lakh rupees or 50% of your base sum assured, lower of the two. It's subject to underwriting though, and only available for married women under 50 with at least 10 years of policy left. But still, it's a thoughtful addition that shows Axis is trying to build more inclusive products. Now, folks, you can also consider adding 2 key riders, and let me tell you why. One is waiver of premium plus rider. If you're diagnosed with a listed illness or suffer dismemberment, all future premiums are waived. This helps you stay protected even if you can't earn anymore. However, this rider is only available on limited pay options. If you're on regular pay or pay till 60, you can't opt for it, which is a bit of a miss. Then there's the critical illness and disability rider, where you get a lump sum payout on diagnosis of up to 64 illnesses. This can really help manage non-hospital expenses, recovery time, or income loss. But do note that this rider is only available for 20 years, so if your term goes beyond that, this won't last the full policy. The third is accidental death and dismemberment, which combines payout for accidental death and permanent injuries. Now, unlike the critical illness rider, this one can extend till the end of your policy and is great for people looking for long-term disability protection. Okay, now let's talk about discounts. Salaried individuals get preferential pricing here. You can also opt for a sum assured booster, where a discount, your sum assured is bumped up slightly, and this remains fixed for the entire policy term. It's only available with the regular and ROP variants, but it's worth asking your advisor to see which benefits you more. And now, time for premiums. We'll show you exact numbers on the screen, but let's run through the profiles. For a 25-year-old female, salaried non-smoker, 1 crore cover till age 60, costs around 6,744 in year 1 and 7,900 from year 2 onwards. That's actually lower than HDFC, slightly lower than ICICI, and for a 25-year-old male, it's 7,900 in the first year and 9,300 later, again in the mid-range. In the 35-year-old self-employed bracket with 2 crore till 70, Axis is around 24,200 for females and 28,500 for males, and this is closely matching ICICI, but again, Bajaj comes in slightly cheaper. So where does Axis Max Life STPP land? It's definitely not the cheapest, but it's not expensive either. What you get in return is strong but built-in flexibility, thoughtful female-centric features, and a wide choice of variants to suit different financial profiles. But the flip side is you need to pick carefully. Some variants like smart cover or regular cover make a lot of sense. Others like whole life or ROP can lead to overpaying without real long-term value. To sum it up, Axis Max Life STPP is a feature-rich customizable term plan that gives you flexibility in structure, early exits, female-focused benefits, and long-term support options like Insta Payout or cover continuance. It's ideal if you want a term plan that adapts to different life stages. But it's also a bit complex, and if you're unsure about which variant or rider to pick, then please don't let it to guesswork. We can help you simplify it for free. Book a free consultation with Ditto using the link in the description. No charges and no spam ever. And finally, folks, remember that no plan is universally the best. What works for you depends on your needs. Speak to a Ditto advisor for personalized guidance. And if you're still unsure whether to go with limited pay or regular pay, or if you want help calculating the ideal coverage for your loan plus life stage, drop a question in the comments and we'll get back to you. Please like, share, and subscribe to support our mission of making India financially literate, one plan at a time. I'll see you in the next one. Until then, happy insurance hunting.